Welcome to a special Executive Leadership Series edition of the Banking Transformed podcast, recorded at the Financial Brand Forum in Las Vegas. This series is sponsored by our friends at Microsoft. I'm your host, Jim Marous. During this series of episodes, we dive deep into the world of digital transformation in the financial services industry. We speak with 7 top executives from some of the most progressive financial institutions, each of whom has embarked on a unique digital transformation journey to become more future-ready and responsive to the changing needs of consumers. We explore the strategies, challenges, and lessons learned by these forward-thinking organizations as they navigate the complex landscape of digital transformation. Whether you're a financial services professional, a fintech entrepreneur, or simply interested in the future of banking, this executive leadership series provides you with valuable insights and inspiration as we explore the cutting edge of digital transformation in the banking industry. So we're going to get started. We know that people are going to be strolling in because everybody had a late start up on the last session. For those of you who don't know, which I'm not too sure if there's very many of them now, but my name's Jim Marous. I'm the co-publisher of the Financial Brand and also the owner and CEO of the Digital Bank Report and the host of the Banking Transformed podcast. For this year's Financial Brand Forum, we wanted to try something new, which was a live podcast or a podcast recorded in front of a live audience. I guess that's the proper way of doing it. So it's kind of like the Tonight Show, doing it in the middle of the afternoon. It's not really live, but it's close. We're going to be distributing this over the next probably 2 to 3 weeks. What we wanted to do is try to bring some of the most foremost leaders in the banking industry in different disciplines of digital transformation into a conversational interview format. Some of them, like April, has been on the podcast in the past. We talked about some of the same things, but with her organization, as some of you already know, it's not like things stay still with April. So I think what's important out of these sessions is to take away a part of it that says, I can do that at this organization. If you're coming here and simply listening to what April does or what Dennis did beforehand and said, oh, that's good learning, but don't deploy anything against that, then we've lost the power of getting together and having so many solution providers on the first floor that are talking about what's possible. I've been in this industry for longer than any of you. I can very comfortably say that. I started in the 1970s, late 1970s. I'll make it sound like it's not as bad as it really is. At National City Bank in Cleveland, I was in the management training program. And as I told some people yesterday, in the management training program, you were brought into the management training program to learn how the bank does things so you can do it the way they did it. That is not the best guideline for future. When you bring in brand new employees as management trainees, the best organizations are now putting them in the middle of very static, not moving forward parts of the organization saying, make something happen. We've got to look at the back office to make the front office good. We have to look at new ways of deploying services to innovate at scale, which is really where our conversation with April is going to go. So we're going to have it be interactive, so we're going to have some time for questions from the audience. So April, just to start off in an easy place, I guess, is talk a little bit about your journey to this point. Where have you been? What have you done?
Okay, so in my career at the credit union, I've been at our credit union 27, almost 28 years. I started in our marketing team, so I have a marketing consumer behavior background. And I've not been in banking as long as you have, but I feel like it's a long time. And I tell all of our new hires, I started when there was not the internet. And I had the opportunity, because at the time we were a smaller institution, to digitize our entire system, right? Like, so anything that you could have done as a member in what I now say kindly analog, right, in person on the phone, we took and created a digital process for it. And so I created what was our first website, our first We made it all in-house, our first website banking, our mobile apps, the employee intranet, and the messaging systems, all of that. And so that made me uniquely qualified to have a higher leadership role over the years. And so I've been the CEO for 9 years, and that's my story. How's that?
And I'm sticking to it, right? You're gonna stick
I'm
to
going
it.
to keep it succinct.
What's interesting is if you've heard any of my podcasts, read any of my writings, or seen me in the last couple of days, the one thing I really key into is the importance of leadership of an organization, embracing change, being willing to take managed risks, and disrupting the status quo. I couldn't have a better guess from the standpoint of this is the leader of their organization. They, on the surface, may look like a traditional financial institution. They have branches. They're a credit union. They are growing. But once you get a little bit lower into the dynamics and get below the surface, you realize that, number one, they're very digital. Number two, one thing I've been talking about for the last 2 days is the importance of collaborating with third-party solution providers or other organizations to allow you to innovate at scale. You're not a massively big organization. In fact, relatively efficient from the standpoint of what I've seen in that you truly innovate at scale and speed through collaborations and partnerships, many of which you do through your CUSO. So can you explain a little bit about that?
So actually, many of my partner friends are here in the audience.
She said it looks like family.
So first we have a CUSO that is called the Reseda Group. It is just 3 years old now. And so as I talked about, we created all of our own technology in the beginning of the transformation of going digital. And over the last 20 years, like everything, its speed is faster. You can't create everything you need yourself. We have to be a credit union and a technology institution all at the same time. And so you can't create enough change and enough different digital applications internal to the credit union. So when we were looking to, one of our first partners, we wanted to be able to round up to pay down things. So we could have coded that ourselves, but we found many partners to do that. And a few years ago, when you start asking fintech partners, can we use your software? What they also wanted were investments in order to be able to grow and scale. So we put together the Reseda Group to do a few things. It permits us to do investments in new tech through CUSO investments, and then it allows us to scale what we can utilize for the membership faster. And so with that, we have a lot of niche products in there that if we were doing for the entire membership, it wouldn't be very efficient or cost effective if we did them all ourselves. So we have products for young people that are rounding up to pay off student loans. We have a partnership with a fintech called Silver that is for individuals as they are nearing and in retirement. So we have digital products that I would say span from young people in high school with Goal Setter all the way to someone who is, contemplating their next chapter in retirement. And so we have made 26 investments that are active in that space. And a lot of our partners are here. We have digital brands, we have, nudge messaging, all of those things that we wanted to create, but could never have achieved that so quickly.
So if you're a bank and you don't know what a CUSO is and the advantage you have,
Yeah.
It's kind of like an innovation lab that has investment authority, correct?
So
in a nutshell.
In a nutshell, well, banks can make some direct investments where credit unions can't. And so we have the ability, though, to invest in what is called a credit union service organization, meaning that its purpose is to serve credit unions and provide products and services to credit unions. And so all of our fintech partners, if they take an investment from us, do have to establish, either convert or establish a subsidiary CUSO organization to take an investment from a credit union.
So basically, you're innovating not just for your organization, Michigan State University Federal Credit Union, but also on behalf of other credit unions that allow them to get legs on things they would not have necessarily invested in.
That's the hope and the intention. When we looked at this, we have the ability, we're a larger credit union, not as large as Alliant, but we have the ability, we're permitted to do a 1% investment. And so for us, that's, just over $70 million. So we can deploy $70 million to make sure that new technology is available to credit unions in the industry and help those fintechs scale to serve credit unions in the industry. And so it's a win-win. If we make an investment, other credit unions will have the opportunity to use the software as well.
So part of the whole innovation cycle is being able to innovate at speed and scale.
Yeah.
We talk about it. It's a different world. I mean, you've been in banking longer than just the time you've been a CEO, and we used to have plans of, this is a 5-year plan, there's a 2-year plan. I know of some organizations, large banks, that are in a digital transformation process that they've been in for more than 10 years. Knowing how things are going on today, and if they knew what was going to happen in the future, they would not have gone upon this way, because everything they developed in the first 6 years now has been outdated in its own way. How do you prioritize or determine what's your next step as you're going down that path of innovation?
Well, actually, we just had a board planning 2 days, and our board chair, after listening to several sessions, came up and said, I just love what you do to test and iterate and deploy and repeat. Test, iterate, deploy, repeat. And that's what we do. So we actually take a data-driven approach. We look in consumer behavior, member behavior. You asked in the previous session, how many people are sending money to Robinhood and all these other places. We take that data and determine where people are looking to use their money, right? So that if we have, and I'm going to not quote the number exactly right, but we have millions of dollars leaving our institution monthly going to Robinhood and Acorns and so forth. So when we have an opportunity now, we're partnering with Tap Engine. It's a very similar concept because we see our members are doing that behavior. So now we want to find a partner to do that behavior and have fractional share investing available to the membership. So we do a lot of detailed diving into data to determine where members are going. Now, of course, everything is focused on AI and what we can, deploy and learn. And so one of the programs we're working on creating in-house, right? It's not new to the consumer behavior, but digital ID. I, checked in at the airport this morning with my digital ID and had my picture taken and walked in. And can we do that? We still have branches. And so can I do that in a branch and have someone be recognized, greeted, and have their account pulled up by the time they meet the employee?
It's interesting. We talked about that earlier this morning, that it came up in another meeting where you have a little device that basically through the phone access, you can know who comes in. And what a greeting opportunity that is, where you go, hey, Jim, good to see you back. And you're going, how did that happen? Almost like the Disney experience with the handband, but it will astound, a little frightening, but it's a value proposition.
It makes your visit efficient, right? Yeah. If you don't have a lot of time and we're using, one of our partners, Larky, is here, and we're using geofencing. I know when you come to a branch, I know when you pull in, if you've turned it on. And so what if we knew that, plus we knew what you were coming for, and the right person greeted you at the door and, helped you execute what you came in for. And then as soon as you leave, we also pop through the Larky application a survey. How was your experience? So we're collecting data in the real time.
You're building conversations.
Yeah, and trying to create engagement and learn from the members as they're interacting with us.
So over the last 4 years with Rosita and the things you've done, what are some of the success stories you have there from, maybe it wasn't the biggest success, but it changed the way that members were being served?
It's so hard. There's so many unique ways we've found success. I would say we have a partner that is called Flow. And what they do is they provide gamification for card use. And so it's been fun for us, and the return on the games have proven that it increases member engagement for using our card. And what that is for us, so we serve Michigan State University on football game day. using a combination of our partners, using the Larky, we can geofence so we know who is at the stadium. Then we can pop up, they can play a game, but they earn the ability to play by using their card, right? So use your card, I can pop up, you have our card, you're in the stadium, use your card for the purchases in the stadium today, then you get to play the game. And it's a, a football themed game, and then there's a leaderboard and people win prizes. But the incremental card spend on those, we turn it on 24 hours before the game you can, get some ability to accrue some plays, and then turn it off within 4 hours after the game. And just the amount of card usage was 30% increase from the same group of folks than before we did something like that.
So this is a great example because it's an out there idea.
Yeah.
But it takes your in-shop data tech area to say, who are we going to select? It takes your card group. It takes a partner, being Michigan State University Athletics Department or whatever, and it takes the technology.
Yeah.
How long did it take you from ideation to implementation?
Oh, in that probably 6 months or less. We put it in pilot.
Okay, see, there's too many people that know what you do, but the reality is 6 months or less to take a complete idea from ideation to implementation. I'm going to keep on saying that because the only place I saw anything near that speed was in China when I visited WeBank, and they basically said they had gotten it to 14 days, but they're a strange organization. They do a lot of things differently, but I can certainly ask in this room, give me an example of something besides your COVID check, your COVID loans that you did anywhere near that speed. This is norm for you though. For your organization. I mean,
we sandbox things, right? So we have a project management process, and we have one team that is devoted to innovation projects. And so those teams, some of our team is here, they identify partners and pilot opportunities. We have a ranking, we test, we iterate, they go into pilot mode. And so they're oftentimes outside of our, the question was asked in the previous session about outside of our core system. Mm-hmm. They might be standalone in the initial phase for test and determine if it's engaging, if the members utilize it, iron out some of the kinks, and then we move it into a full digital deployment. But that's how we can do that quickly, is to put it in its own space and its own environment.
You have your own innovation group that owns a project through its duration. Speed and scale brings with it risk, or could bring with it risk. How do you factor in and how do you look at the risk function of things you're doing outside the organization? How do you work that? Because, in the reality, we look at security and risk as a slowdown factor on speed and scale, but you're doing this at the same time. Is it because you've done it so often that you know what checkbox you have to get right, but how do you get compliance on board? Yeah. How do you get the digital risk group on board? How do they test out the system so quickly?
So yes, we still do all of our due diligence, but we do a different version of due diligence. And what that means is if we are attaching something into the core software that is touching all the member accounts, that is extensive. And so when we do pilots, because we partition off what we're doing, that is a different list of security measures to meet. We have internal ethical hacking teams. They test the software. We have legal, we have compliance, and they have, it's almost a light version that applies because it is not as fully integrated as some of the other software. So, and it is routine now. They have certain factors that they look for. We have request the documentation that are standard. And so we get that all up front. Everyone who partners with us, we tell them on the front end, you're going to have to provide these documents. The faster you do it, the faster we can also move forward.
So really, where I will usually say that the banking industry is totally risk adverse and is almost saying no risk, you're really managing risk based on the implementation. Another example of what they did at MBank, they said, we have millions of customers. We don't look to find out who could possibly go bad. We're picking out those we know are going to go bad and we don't bring them on. But we know that we manage the risk overall to a point where at the end, we're not putting our company at risk. That's a very different mindset. I mean, that takes some internal chops to do that, both from you and your team, because when I started in the banking world and I worked in the branch, it was, you better balance. We don't care if you sold anything. I'm going to guarantee it's probably the same thing now, but it's not hard to balance because you have very few cash transactions. Right. But the reality is it's moving from the mindset of risk management as opposed to risk avoidance. You take a lot of this stuff for granted. And I'm going, you have all these partners here. You have them here because they work with you on those kind of things.
Absolutely.
And know what's expected. We've been talking about, God, it feels like 4 days, but yesterday and today, the fact of, if nothing else, innovation-wise, get the basics right. In other words, do the basic stuff better or as good as anybody out there. When you're talking about opening a new account, when you're talking about taking an application for a new loan, how easy is that for your members to actually do what I'm going to talk about, the basics of banking?
And we have all of that you can do online, and if you walk into a branch, the team will do it all for you. So it's very quick that way. But
using the same technology, basically?
Yes. And so our online systems are very quick. Depends on which brand you're coming into. We have some digital brands, which we've talked about. And that online opening is very fast, very connected to making your identity known and so forth. And you can set up on our MSUFCU brand, which is more traditional. You can do all of that quickly online. You can add a loan at the same time as you open your new account. Those are a little older now, so I think we are planning in the next 6 months an overhaul of some of that, because technology today can make that even faster than what we have been doing. And so those are, we try to keep core business here and innovate outside the core business, so we don't disrupt the core business, keep it running effective and efficiently.
You have two parallel cores that basically, I'm going to call it parallel cores, but basically one you run for testing, the other one you...
Yes, so we have a test and iterate environment of the core instance, and then so that's where our innovation team, where we can do creation. So we have a Reseda create area that they can do that in, and then depending on the partners, they can use that environment as well. And we're working with our friends at Nimbus, who run our digital brands, for similar environments that they can test with our partners as well.
So in that scenario, if something doesn't come about as you planned, you have the ability to shut it down?
Yes. And, for the record, not everything works as you plan, as we all know. So yes, that's the ability.
But in the real world, most organizations won't even go towards something if there's a risk of it not succeeding. You're willing to shut something down if it's not working. That is a mindset shift. It's amazing how much you take for granted, and it's not the normal world out there.
That's good.
And I won't even ask people to raise their hands if it's not the case at your organization. But it shows it can happen in an organization that's not $40 billion. And that, in fact, almost works better because you're small, I would imagine. So
we go into every partnership with a new fintech partner or a new product or to say, this may not make it and it's okay, right? We have a portfolio of 26, and every time we either partner with or invest, we present to the board, we have a separate board for the Reseda group. There's a whole section that says, if this doesn't work, here's the unwind plan, here's the cost that we will have incurred, and here is the impact to our financials, here's the impact to capital. But if you do enough, and you take that risk, now I'm spreading it against 26 partners, and each one of them, if one fails, is very immaterial to the entire organization. Right. We don't expect everyone.
Managing risk again.
Yeah, we do. And so we actually do risk appetite statements for ourselves and the leadership team, as well as our board. So we know the board's risk appetite, we know our risk appetite, we know how to present the intention for each one of the products and projects that we're moving through in a technological way, right? Like, so they know what risk is coming, and they know how we're managing it. They know what we've, done to mitigate it. They know what we've done to, see that we think it should work, right? We're not going into this blindly either. And so we've done all the, pre-work to determine that this seems like a good fit for our membership and that there would be enough use. And if we're wrong on that, then we have an opt-out plan because we had a pilot first.
So how does an idea come to the forefront? How are some ideas submitted? Do the partners bring them to you? Do you create them yourself as April? Do they have submission processes? How does it come about?
We gather ideas from all the places. So yes, some come from me. Those are probably the ones that, scare everyone the most. But we have
But they get done quicker.
we have a committee that is a group of 4 executives that also bring ideas forward. I think you're familiar with our Chief Innovation Officer, Ben Maxim. He's on that, our Chief Digital Experience, and our CFO. And I know that sounds, our CFO isn't traditional, so she has payments and a lot of products in her division. So we come together from where we learn conferences like this, partners that have reached out to us. Ben has individuals on his team that are also vetting fintech partners every day. And then we have a program internal for employees to submit their ideas. And
so you have fintech partners that actually use you as their testing lab, a real world testing lab. So they bring ideas to you as well.
Oh, absolutely. All the time. And then I can hear them laughing right here. But, and then one of the things that we are planning to do because of that, so we have quarterly conversations with all of our invested fintech partners that they can come on to a quarterly call that we kind of facilitate for them. And they, through those conversations, are saying, well, if I partner this technology with your platform and my platform, what can we do differently or new? And as a result, we have a 2-day summit where we bring in all of our partners to the industry. So credit union friends can come and see what we have invested in our experiences. But we're going to do a day before and say, here's a couple of scenarios that we're trying to solve. Do you all want to come together and do some creation, or do you have something that you would like to partner with one of the other partners and do some ideation on the day before the meeting?
So how do you select your partners? Because obviously it's not just hunky-dory, hey, we're going to come create new ideas. It comes with the obligation of speed and scale, the ability to say, as a partner, obviously, you got to play the game the way we expect it to be played. But how do you select a new partner?
We spend a little bit of time with them, have a lot of meetings, a lot of phone calls. We evaluate their tech stack. There's a lot of ways that goes into it. Build relationships with people over time, and we vet them based upon the need that we are trying to solve for the members. And, there's generally, 2 or 3 options today, especially maybe 4 years ago, less choice in those partners. But we look to see, are you interested in the credit union industry and space? Will you create products that serve the members' needs? Will you be willing to co-create with us? Will you listen to our ideas and, know that they may make a difference in the industry? And, we pick our partners, that people that want to engage in that space. I have worked with enough fintech partners. There are 2 things that, we're excited to work with somebody who has a clear purpose and vision, and we want that solution. And that may be all they do for us. But then there's a different type of partner who says, we do this solution, but let's see what else we can make together. And I think more of our partners are on this side, but there is a very specific need for the ones that have a defined product that we need as well.
How do you know up front how well they're going to play with others? Because not too long ago, we had core providers that would hold on to everything tightly. We had fintech providers, fintech partners that would say, we don't want to have this other organization be involved with because they're in the same space as I have. Now, it's interesting because I remember, I think it was 2017 at this event, where all of a sudden I saw partners talking to each other as just as much as they're talking to financial institutions, which was really, to me, visually stunning because we had never seen that before, where all of a sudden people organized that said, oh, this digital banking platform got together with this data platform, got together with this core provider, and they said, you know what, we probably will be able to make a sale if we work together a little bit better. How do you know up front if they'll play well with others? I mean, I'll be honest with you, I never thought I'd see a whole bunch of partners that are all partnering with you sitting together. That's kind of cool. I mean, I've been in the business long enough to know that, you know, Jeffrey, you'd be in this corner, this other company would be over here. This is a different environment, correct? I mean, yeah.
See, now you get to be part of the program. Isn't it great?
Okay, thanks for the money.
So sometimes you know from their reputation, from the work that they've been doing, from initial conversations and how they react if you say, so I've done this to a lot of our partners. I want to bring two of you together for an ideation day because we have this random idea that thinks that it may work. And if you say, I don't know that that's for us, then I know this is probably not going to work in the long term, right? And you just ask the questions on the front end on how much and how willing are they to create and integrate with others. And we do that on the front end and know the people that we're working with that they're open to those ideas and suggestions. Sometimes they say yes, and then turns out they didn't really mean it. And, you know, that happens. Again, that's that we have a portfolio of 26. It's only happened one or two times, and that's okay, right? You know, but the truth is, even today, our legacy core software providers are also, they know now this is the way to win. We're in a shrinking industry. Credit unions, community banks, there's less and less of us every year. And so the way to be successful with the ones that are still here and in business is to partner with them and others to create what they need. And if you don't, you will be an island by yourself someday, and you won't have a lot of friends because we're in a diminishing customer base for those organizations.
Yep. So how do you determine KPIs for innovation efforts?
So we set goals for those. Some of it is financial, and some of it is usage and engagement. Some of it is incremental product engagement, and then some of it is, are we creating efficient processes, right? And so we're in infancy with a lot of things, so not everyone has realized their full potential yet, but we can see the trend is in the right direction. So for us, it is how much is this spend versus all of the other things, right? So if we have a partnership and this is the cost for the technology, then we have to ensure we have the usage and the outcome to make sure that it's covering the cost. Sometimes we select a partner because we're just looking for deeper member engagement and teaching and providing those members maybe a financial education platform that may not have an immediate return. And so we have different measures of engagement. So a lot of it is engagement scores. So we have in the Receiver group, one of the things that we track is the success of all of our investments. So we've done a lot of investing in startups. So they're K1s and they're, come back and they're in a loss position. But what we track is what are our contract savings if we didn't have that investment. What is the incremental value to the credit union for the cost of creation versus the cost of purchase? So we have so many metrics to create the outcome of what we determine to be successful for the Receiver group as a whole.
What's the biggest challenge you're facing today as a leader of a mid-sized credit union that is on the innovation, on the front edge of innovation? Yeah. What's the biggest challenge you face at an organization that's been very progressive?
Well, I think We're all facing similar challenges. I think the economics of the world today are challenging for all financial institutions. What that means for us in particular is we can invest the 1% and it's tied to our growth. So when, the money supply is shorter and we're all fighting each other for it, we're not growing as fast as we were. So it doesn't provide the same ability to make investments in technology as we had, say, 2-3 years ago. So you're in kind of a lull in that capacity. I think we've done the right investments that take time to grow and be successful, and you have to be patient to see those returns in about 2 more years. And that gets harder when your revenue and your net interest margin is squeezed right now. Our board is patient. They see the ability for that to pay off in a couple of years. So that's what we're struggling with right now, though, is the ability to grow some of it fast enough for what we need. But we also have a great ability to take advantage of technology, and we're utilizing that. We're utilizing, for us, we have an AI chatbot that is the equivalent of 55 live chatters, right? That we don't have doing that work anymore. They've been deployed to other work, and so that the more efficient you can get in running the core business, the more you can invest in innovation. And, it takes a long time to right size your legacy experience to be able to be that efficient with the technology. And so I would say we're in the valley, and you can see where we're heading for the peak in the next few years.
Over the last 4 years, taking us back to the heyday of COVID, to the heyday of economic uncertainty, what's the biggest lesson you've learned over the last 4 years of truly massive change? And 4 years from now, when we sit down, we do another interview, I'll say, okay, over this last 4 years, it's going to be a whole lot different from the sense of speed. But what lessons have you learned?
Well, I said this to somebody yesterday. People adapt more than we give them credit for. And what I mean by that is, as humans, we get used to things, right? You got used to going to the office every day until you didn't. Then you got used to staying home. Now you're getting used to, a hybrid work schedule. Your members, had an expectation for an experience in the branch. And when we changed that, they didn't like it at first, but they do adapt and get used to it, right? And so I think we don't give people enough credit to know that they will have the adoption in the new technologies over time. I think what we've learned is that everything is incrementally faster and faster to market, that the reactions are also faster, and so you can iterate faster, and that's what I think we have to learn how to harness, right? We have to take that immediate feedback, the immediate adoption of technology, and the responses from the membership, and then listen to it and make the change. And then they think you can make that change very quickly, right? Because they understand technology more than ever today, and so you have to be fast.
Finally, before I get to the audience questions, you're in competition on an ongoing basis for an employee base. That's harder and harder to get. And how do you work against the legacy mentality that a financial institution is maybe not the best place for somebody to work? When you're going to compete for a person, what do you use as a key selling point as to how you're different than the other organizations that may be going after their skill sets?
Well, I think we utilize all we talked about today, right? We focus on innovation. We focus on the future. We provide you, especially if you're interested in technology, which people like to go to organizations to build great technology. We do that, and we partner and give you experiences that you may not have at a traditional financial institution, that we will continuously provide you opportunities to learn and scale your own knowledge, that if you're curious and you want to experiment, we have the place for you. We listen to you. We take your ideas for new products and services. You can be a part of the lab innovation team to see it come to fruition. And we talk about that. I think, certainly younger generations coming into the workforce want to be heard. They want you to know they have great ideas, and they want to have them implemented and heard. And we have processes to really help them in that journey. And I think that is appealing to someone.
So a very interesting story for those of you who aren't part of the team, from the standpoint of innovation at scale, no matter what size organization. And it's interesting because I've known April for now a few years, and what always amazes me is that she takes all this stuff in such a humble manner, like everybody does it this way. And I know there's a lot of you here that go, holy crap, why do we have such stumbling blocks when we're trying to do it? Are there any questions in the audience today? Okay. Yes.
I'll just ask, for other credit unions who may be in the room, what would be the best opportunity or way to get involved with something like Recedo or capitalize the benefit?
So the question was because the microphone doesn't face that way. So as I heard it, it's if I'm a credit union that wants to get engaged with the things you're doing,
right?
How do I find out more about how to innovate and scale through your platform?
Absolutely. So we have lots of credit union friends that we partner with, that we share ideas and information with. So our team, and so they're kind of up here. So Meredith, if you want to raise your hand. If you see Meredith afterwards, she'll get you her information. So Meredith is in our innovation group and connected you into what we're doing in Recedo. So, we can share what we're doing with our fintech partners, where we invest. We do have Recedo Summit, which is designed for credit union leaders, September 18 and 19 in Detroit, to see all of our partners come and see their software in action.
Any other questions?
I'm curious about the demographics of your credit union and how did they all adapt to innovation?
So
employees demographics or member demographics, or both. Members. So historically, so I've worked at our credit union a long time, we always had a younger membership, but partnering with Silver had us pull data. We have about 360,000 members, and it's almost 50% are over age 50. So I actually have been in a back and forth email with a member who's been a member for 40 years, who's retired, so he is likely in that demographic, who is telling me we don't have enough technology, which I find very interesting. And so I don't know if it's because we serve a university population that, we became wired and technologically advanced faster than other credit unions because the campus was wired, right? People on campus did email, and they were on, creating websites, and they expected that from us because that's what was happening on campus. So the average age of our membership, though, is just under 50. It's probably 45. And the average age of our employees are about 35 to 37. So
it's interesting because your comment also about re-looking at innovations you've done in the past to say, are we still up to date on what's possible? Because it does move very quickly, and you can get complacent. Today, a lot of the partners that you see downstairs, if you pick a really specific partner, you're going to end up having to have them continually evolve themselves, which is something wasn't available 3-4 years ago, where you get such a slice of a specialty, but you're getting the best that has to stay the best, otherwise they go out of business, and you'll notice that first. So good question on the demographics, though, because you've increased the age quite a bit for some of the partnerships.
It's very true, and I'm actually seeing the engagement. So Silver is, our product that is a fintech that is for a demographic clearly defined, age 50 and older, and they have very high engagement. And, we have members that it's growing every month, more people engaged with the platform. They literally, go in and take quizzes and supply information and data. And, I think your average 50 plus person today still knows how to use technology, and we forget about that, right? That's me. Right.
Oh, we go with the old demographic style. Yeah. And on the opposite, we think that every Gen Z is massively digital, and there's some that really, really hold on to the traditional ways of doing things. But I put myself against it, I think probably yourself, against any Gen Z as far as utilization of digital.
For sure.
It's the way people bank that we have to monitor as opposed to their demographics. Because that's that's truly the most valuable differentiator we have today on who do we have to focus on.
My mom is in her 70s and she tells me all the time, I'm glad you made me learn how to use this iPhone. And because my doctor, I have to go to the app. I have to log in before I go to the doctor's office. They put all the, tests required in here, and they do everything digitally, right? And so I think there are people who are pushing against it, but it's not the majority any longer.
Well, and it's all around us. Any of you, I'm sorry if this is the fifth time you've heard this story, but basically, we have a small place in Florida, and we have our regular house in Cleveland, and I have DirecTV in Cleveland, I have Hulu down in Florida, and the reality is they are vastly different with streaming services versus traditional cable. But one of the most startling moments I had was just about 3 weeks ago when I was about to go on a longer trip, and I was talking to my wife about the fact that I got to take my Jeep and get some new tires. I got to get it looked at. We're going to be bringing it back north, so we got to make sure it's all ready to go. And I said, I keep on hearing the commercial for a company called Schumacher, which is out of Delray Beach, but that's further. But it wasn't who I used before. I said, I can't remember. And I keep on doing Google search and won't give me the company's name that I did business with before. And I look over his shoulder, it's nightly news. First commercial is Schumacher Jeep. And I'm going, kind of strange, but I'm going to go with that. Immediately after it, as in the next commercial, was the other Jeep dealer in our area. So basically, we have listening tools all around us that are out there to help us.
They're out there to help you.
A consumer's going to eventually pick up that. Number one, they pay $170 a year for Amazon Prime, but it's not for free delivery anymore. But they value the fact that my data has been safe over the last 15 years. I don't have to look at things I'm not going to buy, but they're going to target more and more into the things they know I probably will buy. The commercials on the TV are going to guide me to my, not just in what I want to watch on TV, but who I want to do business with. And that even Uber is no longer just a delivery service or a taxi service. It actually prompts based on what your history is. When I was in Amsterdam, I got in the Uber, going toward the hotel. It offers me who I can do takeout with, and it was all in food groups that I use regularly, but they know that because of Open Table. That when I didn't respond to that, they say, here's a restaurant you may want to go to around this area. And then it provided me things to do while I'm in Amsterdam. And they were very targeted on things I've done in other countries that they know of, because I use Uber every place I go. So if other banks aren't providing you competition, every single engagement outside of the banking world are doing that. And we're testing new things. The whole Amazon walk into the little store in the airport using just your palm of your card may look really good, but it doesn't work all the time. So you go, okay, not well tested, but how cool it would be when I get greeted by name at your branch and immediately have somebody engage and say, by the way, based on what you've been doing lately, you may want to think about this. April, it is a pleasure, and I think you take so much for granted because it's been what you've been involved in for years. But it's not the world of banking as I see it. But it does show the major thing that it doesn't matter what size you are with regard to the amount of transformation you can do in an instant. You've got to break loose of the mindsets of, we'll innovate on an annual basis. That's no longer going to work. Work with your partners and demand of them what you need, and then don't get in their way. And I'll keep on saying this, that the breakdown between what we want to buy and what we get, I'm sorry, but the blame's usually going to be on us, the banker, because we say, well, we still want this one legacy tool that we've had before, and that's the thing that breaks it. I can talk to you about a lot of partners downstairs that will say the biggest challenge we have is bankers buy something, they want it, and then they don't implement it the way we recommended. Listen to what your partners say. So I thank you for being here. Thank you for all the partners of MSU Federal Credit Union who are helping bring great case studies to the forefront. I'll be talking to you all later. Not negatively about her, but how you're doing that from a partnership basis. How you can sit together without stabbing each other. I mean, it's like a bunch of kids sometimes, in the partnerships, but this is working. Thank you, as always.
Thank you.
Appreciate it.
Thank you.
We do take a lot of things for granted. We hope you enjoyed these candid conversations sponsored by Microsoft. Microsoft enables digital transformation for an era of intelligent cloud and an intelligent edge. Its mission is to empower every person and every organization on the planet to achieve more.